Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi everyone. Today's Tuesday, August the 5th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. As we begin taking a look at the ES this morning, we notice that we've got a pretty tight compression event. But here's what I want to show you. Look at yesterday's 30-minute opening formation and look at where we are now. It clearly gave us the target yesterday on the breakout, and it has stayed compacted in that range today. We have had some early morning volume. We had a lot of things happen at around 3 to 4 a.m. This is some kind of news outside of Europe. I don't know what it is. I've really just been doing analysis all morning, not checking news. But here's what it's saying. The AI, or the machine learning, as I like to call it, for TrendSpider, pardon me, folks, is suggesting that if we hold this area, the probability of a breakout to the upside is higher than anything else today. So the long action is going to occur above 6,380. That's key resistance. The opening range this morning is very, very tight. It could make a nice floor of support for your entry just below at Thursday's implied vol, and we are blasting out of all these volatility formations, which means it's going to fuel more buying as these hedgers try to even out what's going on in the charts. So the breakout north here is going to very likely send us back to the big fat round number at 6,400. So long action potentially on the pullback at 6,358 or at the breakout of 6,380. Watch the first 5-minute volume event to see if it comes in hot and breaks the level. That's going to confirm price action to the north. And if we do get up into this thin volume node up here, we're very likely to run into the edge of it. That's up at 6,420, and we would have wiped out almost all of the heavy volume decline. Interestingly, just between the accumulation here and the rise of volume yesterday, the accumulation distribution for the quarter, which was slightly negative, is now slightly positive. So it really does tell me that traders are trying to buy the dip before what they expect to be the fourth quarter. A lot of news coming out for interest rates, interest rate cuts, and all of that stuff. The guy from Switzerland decided he was coming to the States. He doesn't even have a meeting set up. You know, I mean, that's pretty bold. You want to meet with the president, you don't ask for a meeting, you just fly and expect him to meet you. You know, I'm not sure what's going to happen there, but we'll see how that goes. Now, if per happenstance we lose the low of the opening range, which at this juncture is 6,364, a failure to recapture that opening range puts us in a short into support at 6,344, right? That's the secondary entry long. We've got the volume weighted average price for this range at 6,334. So you could walk that down into baseline support, which is also the value area high, 6,325. But this rotation seems pretty unlikely according to the statistical motion. Now, momentum is very sideways, so it is suggesting that the pullbacks should be buy zones following in the directional motion. Let's take a look at the NQ. So, same sort of breakout pattern. Palantir came out, and boy, is it the darling. It is certainly the darling of motion. Look at the range from the high to the low of this last move. Just for grins, I'm going to put a Fibonacci in there and see where the 50% marker is. That 50% marker is 23,300 or so. What it's telling us is that that should be the floor of support. Notice for the NQ, that 50% range of the decline, also happens to be very near that 30-minute opening formation, but the high of the 30-minute open from yesterday, from day before yesterday, which is what I also meant on the ES chart, forgive me, is giving us that floor of support. So, momentum pointing to the upside, pullbacks should give us buy zones. This is inventory accumulation. They are very likely to buy at the bottom of the range, 23,310, and head up to the north. The close of yesterday, 23,350. It was broken a few times overnight. We'll see if it comes back and gives us a support zone. Ideally, I like the buy zone somewhere around 23,307. But if it loses this zone, we could rotate right back down into value area high, which is anywhere between 23,200 and 23,150. Upper targets, 23,500 and 23,600. No idea if we'll hold all of that, but these thin volume pockets that we're seeing, if we get to that edge, we should boost past it into the next area of resistance. My thought is, be alert. We got a bond auction today, but it shouldn't be a big deal. Not a lot of people talking about it, so dips continue to be buy zones. Notice the higher lows and more than a 50% recovery of that fade. Pretty remarkable in my mind. Really remarkable. Let's take a look at the YM. Quieter chart because I don't have the annotations on here. Notice 2 days ago, opening range formation, still holding the floor of this chart. My supposition is these higher lows, higher highs. Let's see what kind of rotation we've got here from the big move. Volume is higher than normal in the pre-market today, and it does look like they're buying the floor. So yeah, dips are buys. Dips are buys. No weakness showing up yet. VIX very, very quiet. Also, 50% of the rotation, however, is where we are seeing resistance. Breakout there should send all of the shorts that are thinking this rotates down running for the hills, and that should give us 44,550. Opening range formation today is pretty tight, right? And we literally are sitting right on the edge of it, right? Right on the edge of that zone. We've broken both sides of it. We broke the upside, we broke the downside, but holding a floor. Momentum also showing that price action should run back to the upside. I would put a buy stop here, take the breakout. It should run into the high volume node and then through the low volume node, which is at 44,609. Buy zone today, based on this formation, 44,190. And we'll see what happens. If per happenstance we lose this 44,160 area, 150 area, the buyers are going to have to really come back quickly, or price action is going to break down and the low volume node, which was an old resistance zone of 44,000, will now try to fight and battle as support. Low of the opening range, traders are trying to get up and over it right now. That's 44,350 or so buying, right? But we are caught in heavy congestion, in inventory accumulation. Buyers came up through the wick. Notice that that's probably going to send us to the top of the range and hold the bullish pattern in general. Let's take a look at micro Bitcoin. This chart is in a sideways patch for sure, right? They are trying to accumulate inventory right here around this edge from Fridays. What is today? Monday, excuse me. Today's Tuesday. This would be Monday's opening range. It's holding as a floor. This means if we lose 114,200 or so, we're going to see another sweep down. Now, I think that's what happens, but we are building the formation to have inventory accumulation. Here's the fly in the ointment. For this chart, our opening range low is now forming up as resistance. So what could we do? Triple bottom test, long at 114,200 to bounce up and hold the top of the range at 116,000 and some change. If we get above 116,200 or so, we want to watch for a volume press that pushes out of that area, gives us a very shallow pullback. You can look at this on a 5-minute chart, and that would give us long action into 116,700 and indeed Friday's opening range. My thought is that that's the likely target as we move through. This is a low volume event. This low volume node right here suggests that we could move all the way up back to the value area low, which is 117,350. Overall, mixed, but buy zones occur at the base of the formation with a nice tight stop. If it doesn't hold, we'll see the rotation down. So far, everything in the charts looks like sideways accumulation events in general. So we want to be really careful about that. Let's take a look at oil. Okay, so as we know, the administration, I know, I've said it 1,000 times. I know you're like, all right already, you've said it. The administration wants lower prices. We have oil absolutely fading from this very big spike, moving all the way down, big volume shelf collapse. It falls right through the low volume node, and now we're trying to build some sort of support here. Here's the storyboard. If we lose 65.35, remember I said yesterday that was a great buy zone. I had my order waiting right down there. I'll be doggone if it did not just come by me and race all the way to the top. Resistance area still 67. We've had high, low, lower high, lower low, lower high. If we hold this range, we could have some inventory accumulation. If we break this range, the volatility event for the next leg is all the way down here at $63. So let's take a look at the daily chart and see what we're staring down. Okay, so right now, sideways patterns, old resistance, new support. This $64.27 is a number I am looking at. I like this zone because clearly it's showing areas where traders were sellers and then became buyers. And so a pull back into that deep area seems to be the most likely event. Okay, so I'll be looking for around this 64.50 to try a long again. You know, I would try the 65.30, but we simply have a series of lower highs and lower lows, and I cannot ignore that. That's something that tells me price action is in a bit of a downward flow. Now, we'll see if the news with Putin or whatever gets rowdy, but, you know, I prefer the big dips to go long. Ideally, what I would love to see is a great big spike up into this value area where we've got this big volume shelf and then a clean rejection that gives me a breakdown. Let's take a look at gold. Let's see if the gold numbers are back. Nope. So there's about a $40 difference between gold that's printing here on these charts and gold. Is it 40? Yeah, about maybe, let's call it 50. Okay, the rotation is the same, but the numbers are off by $50. So what do we say about that? I don't know. You know, I talked to them about it, and I think it's got to do with rollover. I don't know, right? I don't think they care. You know, I mean, they don't do a lot of future stuff. I'm their primary futures advocate, so I get put on the back burner. All right, so here we are with this volume shelf here, right? Base of the volume for the value area looks like it's all the way down at 3,365. Here's the short story for gold. Gold is going to continue to get bought at every dip. We have seen the lows that stay low. They're gone because central banks continue to buy more and more every time, every single time. And if we have an interest rate fade, it's going to bring the dollar down. It's going to spike gold again. And I think the traders are sort of preparing for that. That being said, the opening range was very tight. We have a high volume node. Traders were trying to hold it. We've broken it. Now the next high volume node, I would be looking for longs really around 3,365, but more importantly at the base at 3,357. The volume weighted average price is, what is that, 3,350, and this low volume node into the value area high does give me a little bit of pause. Now, that's a long move. Could this be a short in gold today? Well, right now, dips are buys, momentum is negative, and price action is negative, so the bounces look like sell zones. So here's a potential selling event. If we come to the top of the opening range from Monday and fail to reject, then we know it's headed to the top. If we come to the top of yesterday's opening range, that's 3,396, and we fail it, it could easily give us lower lows. Now remember, what you're going to have to do is add, $50 to, no, this one is now $30. Yeah, $30 you're going to have to do at the numbers if you're looking for that trade, right? I just want you to see the rhythm, and you just add the difference in price, and hopefully this settles out in the near term. I have no idea what's going on. Let's look at SPY lastly. SPY is in a recovery zone, right? Really nice recovery. No, don't want to do that. No, you know what? Let's do this. Okay, so what we have is a support structure, a gap that really almost filled yesterday, right? The great big spike down. I don't remember seeing this fade, but it was an area that said, hey, listen, if we fill the gap, it's going to be a long. Today, everybody's sitting in the wait state. Notice the low volume node here at 633.34. That could easily be a target zone, but the point of control at 635 is key. Notice what this chart did. I think this is very interesting. It's a good storyboard. Here is all of this accumulation. Inventory accumulation, distribution at a discount. Everybody turns around, buys it back up. We are inside this original area of inventory accumulation. Statistically speaking, a pullback into the VWAP sends us to the top of the range again. So, could it be a jagged motion? Yes, but this one clearly shows that the probability of upside pressure is much more than the probability of a breakdown. Okay? That being said, could you trade a short? Yes, I wouldn't want you to, but the dip would be the buy zone. If it loses the VWAP, Is this a VWAP? Yes. If it loses the VWAP, it's going to try and recover it. If it doesn't, moving through this low volume node into the heavy congestion zone is very likely to be the next step. All right, dips or buys, they are moving undaunted. Be careful, trade what you see, not what you think, and I'll see you on the streams.